Hey guys, Dave with Moniology here. Thanks for joining me on this weekend market review for the weekend of May 12th and 13th, 2018. Happy Mother's Day to those of you who are celebrating. Let's take a look at the charts from daily, weekly, and monthly perspectives to give us a better clue of where we are, where we've been, and where we're likely headed. Starting with the 10-year Treasury yield. So looking at the daily chart here, it looks like there is some consolidation that's going to be taking place at the 2.9 level for a little while before we ultimately do break above that 3 and 3.1 level. Right now there's some negative divergence taking place, and so I would expect to see this consolidate for a while, letting the PPO kind of weaken a little bit before it strengthens a little bit later on. It's still above its 50-day moving average, and I expect this to resolve its way higher down the road. Now let's get to the right view here. Okay, so the weekly, the weekly is what I've been talking about here. We had this bullish flag breakout a couple weeks ago in April, and now it just takes some time to consolidate above that breakout level. RSI is hovering around that 69 level. Once it breaks above that 70 level, that's when it gets into very bullish territory and likely takes us to that 3.1 to 3.4 level, which is where I think we'll find some stiffer resistance going forward. On a monthly perspective, this is the line in the sand right now, about that 3.1 here, and ultimately we may break above this 200 EMA this year, about 3.4. I think at that point, once you break out above it, there's going to be a tremendous amount of resistance. The shorts will be stopped out of their positions, and then it will eventually probably come back down and either hover around the 3 level or go back to the 2.5 level, because it's been that rate increase would be too much for the economy to bear. We'll see what happens. Gold is interesting here. Gold daily, we had a nice hammer on the daily on a Thursday, and then we met pretty stiff resistance, which was at the 50-day moving average as well as the middle Bollinger Band. PPO is curling to back above 0, so this is a very critical juncture as RSI is right below the 50 level, which is going to be stiff resistance. If we break it, and I believe we will, I think the next run is back towards that 1360 level, which again I've been on the record saying I think will break sooner rather than later. I'm going to try to get to a precious video today, which I'll cover how the actual miners are finally showing strength after several years relative to the metal. So that's a very positive development, despite some of the recent weakness in gold. Gold weekly here, this is why I'm not really concerned. We closed the week above the 50 RSI level. I said last week that this was a very important level to close above, and here we are right now. So while PPO is still below 0, I think we're starting to curl back above, and we are still in bullish consolidative territory. So there's nothing really to be concerned about. I would be using these opportunities to add to my positions. Look at this. It's not really an inverse head and shoulders. I mean, this could be a shoulder, this could be a head, and this another shoulder, but this is a massive base here, and eventually when this breaks above that 1400 level, there's going to be a stampede to buy precious metals, and you want to be on that train when it leaves the station. Here's the long-term monthly chart. We broke above this 5-year corrective pattern. So if you bought here and you rode this down, that was extremely painful. However, if you look at it from a longer term perspective, this is a very small correction in a major bull market. So break above 1400 really takes this bull market back into full steam ahead. Taking a look at the high yield bonds, they're actually looking pretty good right now. I think the markets in general are setting themselves up for a move higher, and junk excuse me, and junk is telling me that the markets are not really concerned by some of the relative weakness that we've seen in some of the data, at least at this point. So we've had some consolidative action, but ultimately junk is relatively healthy right now from a technical standpoint. You see on the weekly we closed back above the 50 level in RSI, and it looks like it wants to move higher with PPO basically at the 0 level, and there's some good opportunities in this particular space. On the monthly level, we're still below that 69.70 level. Let's see what happens. If we can't recapture that level, ultimately I do think we'll roll over. But the very fact that we've been below PPO for 4 months right now and we barely moved lower, that says that this is just a consolidation and nothing more. Crude oil daily. Crude oil has been the hottest sector basically in the markets this year, and we kind of called it ever since we were at the 45 level. We expected a run towards 70 to 80, and we're at the 70 level, so we've gotten mostly there. Great time to trim some positions if you bought in at the 45 level. But look at this, higher highs in RSI consistently. That's what you want to see. This chart tells me that so long as we're above that middle Bollinger Band and the 50-day moving average around the 65 to 67 level, there's really no reason to be concerned for downside. Crude oil on the weekly chart, it looks like it wants to break higher, and you see this is massive basing pattern here, and if we break higher, and we might move as high as 85 to 90. That's pretty crazy considering how low we went all the way to 26 at some point in crude. But PPO here is now firmly above zero. Look at the volume spike in this last week. Clearly speculators are jumping on the train, and that's when you got to become suspicious. But at the same time, technically this looks very, very good. Monthly chart, this is the inverse head and shoulders we were pointing out for a long time, and now we're breaking above that neckline around that 62, 63 level, and we've got a tremendous amount of support below us. 50-month moving average at 60, 200 moving month average at 62. This is the type of chart you want to see if you're a bull in energy and you want to be buying some of the best names in the sector, because we can see multi-year runs ahead. Nasdaq daily, higher highs were created here on the daily chart, and it looks like it wants to move higher again, possibly to the 7,700 area. So there's a lot of upside here in the short run for Nasdaq. Nasdaq weekly, we broke out of this recent downtrend of momentum, and it looks like we want to make a run back towards that 61 level. So there's some nice couple percentage points up moves in the market, in my opinion, in the coming days. Nasdaq monthly still in super overbought territory, but that's precisely above that 70 area where the biggest moves do occur. So this looks very good. This looks like it wants to move back higher, and barring anything unexpected, I think that we will see new highs in the Nasdaq. The Russell, same thing. I mean, this Russell right now looks stronger than most of the other markets. We're higher now on RSI on the daily than we were in previous times that we hit this level. So this is a very bullish development. Russell weekly looks like it wants to take out that 60 level and move higher to all-time highs here. And the monthly is back above 70. That's a very, very critical development. And so Russell suggests that we're moving to all-time highs here. Now S&P, it's actually been one of the weakest markets of the major three, but even here RSI on the daily is higher than previous higher points in price, so I think this is a very positive bullish development. The weekly actually has had the most damage, but we're above the 50, and it looks like, and in my opinion, that means that there might be the most amount of upside in the S&P versus the other indices. So between the three, if you want to catch an index that's been kind of beaten down, S&P might be the one to go with, especially considering the names in the oil sector. S&P monthly above the 70 level, that's very positive. I think we're going to hit 2,800 sooner rather than later. Now, looking at the dollar, so dollar had a very, very nice run, and now it's pulling back. Question is, can it find some support on this pullback, or was this snapback rally just a washout of some of these shorts? We'll see what happens. I said breaking above that 92 level here was very crucial, and so far we broke it with positive momentum. So you want to see it hold, maybe consolidate here and push higher. But if you break below that 92 level, that would be very, very bearish. I still say the probability is to break above this 95 for the short run, maybe 96 to 98, but we'll see. And the dollar monthly still below the 50 RSI in the monthly, and that's a very bearish development so long as we're below that level. PPO is climbing, so that's positive. But until this particular level, the 50, which served as crucial resistance multiple times right here, until that's broken out from a longer term perspective, we are in a bearish market in the dollar. But the VIX is getting killed here, and this is a very bearish chart at this point. You see on the weekly, it broke below the 50 RSI level and couldn't find any support here. I thought maybe we'd bounce. Nope. Now you got the 200 and the 50 weekly moving average curling over here, and so I think the markets are setting themselves up for a very nice run. And this VIX move, which I thought possibly could get us back to 90, doesn't look like that's going to happen anytime soon. Meanwhile, on the world charts here on the weekly, it looks like it wants to break above this middle Bollinger Band on the weekly. It's above the 50 RSI level, and so there's a lot of upside with PPO curling. This could be a very good time to go long with at least a target of 2,200, possibly here of 2,400 if this rally really does take off, as it's starting to look like more and more with every passing day. Guys, thank you very much for watching. Please subscribe to our YouTube channel at Moniology, Twitter and StockTwits at Moniology. And if you can support the work that we do, we would really appreciate it at patreon.com/Moniology. The link will be in the show notes. Any contribution will go a long way towards helping us make better content more often. Thanks, guys, and have a great week.